In a world obsessed with fleeting trends and overnight fortunes, there's a man who built a $100 billion empire with principles that seem almost ancient. He eats McDonald's, drinks sugary soda, and still lives in the same modest house he bought decades ago. So, what's the secret? How did Warren Buffett, the Oracle of Omaha, become the most successful investor of all time by seemingly defying all the rules? This is his story. We all know the name, Warren Buffett. Synonymous with wealth, wisdom, and, well, maybe a little bit of folksy charm. He's the Oracle of Omaha, the billionaire next door, the guy who drinks cherry Coke and eats McDonald's for breakfast, all while managing one of the largest fortunes in history. But beyond the folksy image, beyond the billions, lies a story far more compelling than just accumulating wealth. This isn't just about money. It's about principles, patience, and a profoundly unconventional approach to life and business. It's a story of transformation, of incredible highs and quiet lows, and of a man who, against all odds, built an empire by simply being himself. From humble beginnings in the heartland of America, Warren Buffett didn't just become rich, he redefined what it means to invest, to lead, and to give back. He built Berkshire Hathaway into a behemoth, a sprawling conglomerate that touches almost every corner of the global economy. But how did he do it? What are the secrets behind his legendary success? And more importantly, what can we learn from a man who seems to operate on a different plane than the rest of us? Forget the Lamborghinis and the mega yachts. Warren Buffett's story is a refreshing anomaly. In the world of high finance, it's a story that proves you can be wildly successful without sacrificing your values, your humor, or your humanity. So, buckle up. Because the journey of Warren Buffett is far more fascinating and far more instructive than you might imagine. To understand Warren Buffett, you have to go back to the beginning. Omaha, Nebraska, in the midst of the Great Depression. Born in 1930, Warren Edward Buffett entered a world grappling with economic hardship. But even amidst the gloom, young Warren saw opportunity. He wasn't playing with toys, he was counting pennies, obsessed with numbers, and already thinking about how to make them grow. By the age of 6, he was buying packs of gum from his grandfather's grocery store and selling individual sticks to neighbors for a profit. A lemonade stand, too basic. Warren was setting up multiple stands, strategically placed for maximum foot traffic. He wasn't just selling lemonade, he was building a distribution network. At 11, he bought his first stock. At 13, he was filing his first tax return. This wasn't just precocious, it was practically preordained. His father, Howard Buffett, a stockbroker and later a congressman, instilled in him the values of frugality, integrity, and independent thinking. But it was a book, The Intelligent Investor by Benjamin Graham, that truly ignited Warren's passion. Graham's principles of value investing, buying undervalued companies with a margin of safety, became the bedrock of Buffett's entire philosophy. It wasn't about get-rich-quick schemes, it was about patient, disciplined, and rational investing. Driven by this newfound intellectual framework, Buffett enrolled at Columbia Business School to study under Graham himself. He devoured Graham's teachings, becoming his star pupil. But Buffett wasn't just absorbing information, he was refining it, adapting it, and preparing to put his own unique stamp on the world of finance. The paperboy from Omaha was transforming into something much, much bigger. He was absorbing knowledge, honing his skills, and preparing to launch his own venture. But the principles he learned from his mentor, Benjamin Graham, would be both his foundation and, surprisingly, something he would eventually need to evolve beyond. What were these foundational principles, and how would Buffett both embrace and then transcend them? Benjamin Graham wasn't just a professor, he was a legend. The father of value investing, he taught his students to see stocks not as ticker symbols, but as pieces of businesses. His core principle was simple: buy businesses for less than they are worth. Find the bargains, the undervalued gems hidden in plain sight. And Warren Buffett was the perfect student. Graham emphasized the margin of safety, buying stocks at a significant discount to their intrinsic value to protect against errors in judgment or unforeseen events. He preached patience, discipline, and emotional detachment from the market's irrational swings. Buffett absorbed these lessons like a sponge, but he also began to see beyond Graham's somewhat rigid approach. After a brief stint on Wall Street, Buffett returned to Omaha, believing he could apply Graham's principles more effectively away from the noise and distractions of New York. In 1956, with just $100 of his own and capital from family and friends, he launched Buffett Partnership Limited. This was the proving ground, the laboratory where Buffett began to refine his own investment blueprint. He wasn't just replicating Graham, he was evolving, innovating, and starting to forge his own path. One of his early investments was a textile company called Berkshire Hathaway. Initially, it seemed like a classic value play, an undervalued asset. But Berkshire Hathaway would become much more than just another investment. It would become the vehicle, the canvas upon which Buffett would paint his masterpiece, and it all started with a seemingly simple, yet profoundly powerful idea. Buy good businesses at good prices, and hold them for the long run. Berkshire Hathaway. The name itself sounds rather unremarkable, and in its early days it was a struggling textile company in a declining industry. Buffett initially bought shares believing it was undervalued, a classic Graham-style investment. But the textile business continued to deteriorate. Most investors would have cut their losses and moved on. But Buffett saw something else. He saw a shell, a vehicle, a way to build something far greater. In a pivotal moment, Buffett realized that the real value of Berkshire wasn't in its textile operations, but in its structure, its cash flow, and its potential. He began to pivot, using Berkshire as a holding company to acquire other businesses. The first major move was acquiring National Indemnity, an insurance company, in 1967, followed by Geico. Insurance became the engine, generating a steady stream of cash, float, that Buffett could then reinvest into other undervalued businesses. Over the decades, Berkshire Hathaway transformed from a struggling textile mill into a sprawling empire. Railroads, energy companies, insurance giants, candy makers, furniture retailers, jewelry stores, a seemingly disparate collection of businesses united by Buffett's unwavering investment principles. He wasn't chasing trends or tech fads. He was buying solid, understandable businesses with strong management, durable competitive advantages, and, crucially, at a fair price. Now, this transformation wasn't solely Buffett's vision. A key turning point was the arrival of Charlie Munger. Buffett often says that Munger broadened his horizons, pushing him beyond Graham's strict value investing principles to appreciate the value of wonderful companies at fair prices, rather than just good companies at wonderful prices. The partnership between Buffett and Munger became legendary, a meeting of minds that propelled Berkshire to unprecedented heights. And together, Buffett and Munger built not just a company, but a culture of integrity, rationality, and long-term thinking that continues to define Berkshire Hathaway to this day. If Warren Buffett is the oracle, then Charlie Munger is the vice-oracle, the indispensable partner, the intellectual sparring partner who sharpened Buffett's thinking and broadened his perspective. Munger is known for his sharp intellect, his encyclopedic knowledge, and his brutally honest, often humorous assessments of the world. Charlie Munger brought a crucial element to the Berkshire equation, wisdom beyond just finance. He emphasized the importance of mental models, drawing insights from diverse fields like psychology, engineering, and history to make better decisions. Munger famously said, "It's not supposed to be easy. Anyone who finds it easy is stupid." Munger's influence pushed Buffett to invest in higher quality businesses, even if they weren't dirt cheap, recognizing the long-term value of strong brands and enduring competitive advantages. The annual Berkshire Hathaway meetings became legendary, not just for the sheer scale and spectacle, but for the unique dynamic between Buffett and Munger. Their witty banter, their contrasting personalities, and their shared wisdom created a captivating and educational experience for shareholders. Munger's dry wit and blunt honesty perfectly complemented Buffett's folksy charm and optimistic outlook. Together, they were an unstoppable force. The Munger Effect on Berkshire Hathaway is undeniable. He helped Buffett evolve from a pure value investor to a more nuanced and sophisticated business thinker. He encouraged him to think bigger, to aim higher, and to recognize the power of quality over cheapness. And together, Buffett and Munger built not just a company, but a culture of integrity, rationality, and long-term thinking that continues to define Berkshire Hathaway to this day. Warren Buffett's success isn't just about numbers on a spreadsheet. It's about a set of principles, a philosophy that extends far beyond the world of finance. He's become a global icon, not just for his wealth, but for his wisdom, his humility, and his remarkably consistent approach to life and investing. The circle of competence, you stick to what you understand. Margin of safety, always leave room for error. Long-term thinking, patience is your greatest asset. Integrity, your reputation is everything. Simplicity, avoid complexity for complexity's sake. These aren't just investment strategies, they are life lessons applicable to almost any field. Let's not forget the humor. Buffett's folksy charm and self-deprecating wit are integral to his persona. He famously drinks copious amounts of cherry Coke, eats McDonald's almost daily, and plays the ukulele. He's a billionaire who lives in the same modest house he bought in 1958. This down-to-earth approach, this refusal to be defined by his wealth, is part of what makes him so relatable and so admired. Buffett consistently emphasizes the importance of financial literacy, of understanding basic economic principles, and of making sound financial decisions. He encourages young people to learn, to read, and to develop their own independent thinking. And he leads by example, demonstrating that true wealth isn't just about accumulating money, but about using it responsibly and for the greater good. In 2006, Warren Buffett made a monumental decision. He pledged to give away the vast majority of his fortune to philanthropic causes, primarily through the Bill and Melinda Gates Foundation. It was the largest charitable donation in history, a staggering commitment to address some of the world's most pressing problems. Buffett's philanthropy isn't just about writing checks, it's about strategic giving, about applying the same principles of rationality and long-term thinking to charitable endeavors as he does to investing. He believes in tackling systemic issues, in empowering people, and in creating lasting positive change. The Giving Pledge, co-founded by Buffett and Bill Gates, has inspired hundreds of billionaires to commit to giving away the majority of their wealth to philanthropy. This act of unprecedented generosity is perhaps the most profound statement about Warren Buffett's values. It demonstrates that for him, wealth is not an end in itself, but a means to an end, a tool to be used to improve the world, to alleviate suffering, and to create a more just and equitable society. In giving away his fortune, Buffett is making his ultimate investment, an investment in humanity itself. If you've made it this far, first of all, thanks. And second, please leave a 100 in the comments. Also, if you like this video, please hit the like button, and if this is the sort of video you want more of, please hit the subscribe button and the bell. It helps with the YouTube algorithm, which in turn allows us to create more content like this and better content as the channel grows. Warren Buffett is in his 90s, Charlie Munger has passed away. The question inevitably arises, what happens to Berkshire Hathaway after the oracle is gone? Buffett has meticulously planned for succession, ensuring a smooth transition to a new generation of leaders. Greg Abel is slated to become the next CEO, inheriting a company built on enduring principles and a deeply ingrained culture. While no one can truly replace Warren Buffett, the foundation he and Munger built is remarkably solid. Berkshire Hathaway is more than just a company, it's an institution, a testament to the power of long-term thinking, integrity, and rational decision-making. The principles they championed will continue to guide Berkshire for decades to come. Warren Buffett's legacy extends far beyond the billions he amassed. It's a legacy of wisdom, humility, and generosity. He showed the world that you can be wildly successful without losing your humanity, your humor, or your values. He proved that true wealth lies not just in what you accumulate, but in what you give back. And as the Oracle of Omaha rides off into the sunset, his lessons, his principles, and his enduring wisdom will continue to inspire generations to come. But Warren Buffett's story isn't just his story. It's a reminder that these principles, patience, integrity, a focus on value, and a generous spirit are available to all of us. You don't need to be a billionaire to apply his wisdom to your own life, your own investments, your own journey. So take inspiration from the Oracle of Omaha, embrace his principles, find your own path to success, and remember that the greatest returns in life often come not just from what you gain, but from what you give. That a good strategy, patience, and time, along with hard work and integrity, you can build true wealth. Has this changed the way you feel about billionaires or what wealth truly is? If so, please leave your thoughts in the comments below.